Since 2020, an inflation crisis has severely eroded the purchasing power of billions of people across the board, from groceries to gasoline to automobiles. In this video, we outline a comprehensive strategy to help you make money during inflation. Inflation usually refers to price increases across the economy, but it can also refer to priced increases in just one or two economic sectors. Inflation can be caused by various factors, including increased demand for goods and services or rising production costs. The rise in inflation in the last couple of years can be attributed to several factors, such as the COVID pandemic and the Russia-Ukraine conflict. To stay financially healthy, we must aim not only to invest so that our money keeps up with inflation, but also to profit from it. The following are some of the most effective ones you can take to increase your wealth during a period of high inflation. Number 9. Open a brokerage account. Investing is essential for beating inflation. For example, the S&P 500's average annualized return is around 10%. Assuming an average rate of inflation of 6%, an investment in the S&P 500 will yield a return of 4%. You could open a brokerage account for additional savings that you can view as your mid to long-term savings and take advantage of compounding. It is critical to have a well-diversified investment portfolio. Such a portfolio limits the extent of damage that can result from a downturn since it comprises a variety of assets, such as stock funds and bond funds. Number 8. Consider TIPS. TIPS, Treasury Inflation-Protected Securities, are U.S. government bonds that help protect you from inflation by increasing your principal as inflation rises. TIPS also pays interest at a fixed rate twice a year. Moreover, the value of interest payments fluctuates with inflation. It is best to purchase TIPS or similar bonds before inflation occurs. Then, as inflation rises, you can reap the full benefit of the principal and increase in interest. In contrast, purchasing TIPS too late in the inflationary cycle will harm your portfolio. Last but not least, TIPS are excellent investments for retirees looking to preserve their principal. Number 7. Consider investing in real estate and commodities. Single-family homes financed with low interest, fixed-rate mortgages perform well during inflationary periods. As inflation rises, the value of your home is likely to rise, while the monthly service cost of your mortgage remains constant. This strategy is at the heart of accumulating home equity, which can significantly increase your net worth. You can protect yourself from rising rents by purchasing real estate. Rents, like any other consumable, tend to rise when inflation rises. Despite being less flexible than rental agreements, mortgages have an advantage when inflation is high. Listen to Warren Buffett confirm this.
If you own a home, though, with a very large mortgage and you have incredible inflation, it wipes out the mortgage, and you still got...
Number 6. Do not keep an excessive amount of cash on hand. If you keep more liquid cash on hand than you need for a rainy day, you should consider investing the excess. Although the stock market is currently low, that investment could earn a much higher interest rate over a long period than it would in a savings account. However, it's unadvisable to ignore your savings, and we'll later explain why savings are also significant. Number 5. Consider value stocks in the consumer staples sector. Investing in commodities such as food and energy, which are always in high demand, is wise because staples are necessities. Hence, companies selling them can raise prices while riding the inflationary wave. Number 4. Search for tax efficiencies. Look for tax efficiency in your brokerage account to help you fight inflation. Investments that lose less of their returns to taxes are better suited for taxable accounts, while those that lose more of their tax returns are better suited for tax-advantaged accounts. If you want to keep more of your money, tax-efficient investing will reduce your tax burden, which means you will pay less tax on the earnings from your investments.
There'll be more money in your account by the end of business.
Number 3. Save in an emergency fund. It is essential to create an emergency fund. Open a savings account and deposit 3 to 6 months' worth of expenses there, which will be kept in cash and used only for emergencies. Though most savings account rates are low, it's much better to earn some interest than none at all. So look for high-yield online savings accounts, which typically offer rates much higher than the industry average. If you would like to save short-term, consider a certificate of deposit, which offers 3 to 6 months' worth of expenses there, which will be kept in cash and used only for emergencies. Though most savings account rates are low, it's much better to earn some interest than none at all. So look for high-yield online savings accounts, which typically offer rates much higher than the industry average. If you would like to save short-term, consider a certificate of deposit, But don't chase yield by investing in one that takes longer to mature than you can afford to leave without.
Don't be greedy.
You could also save significant money by staying faithful to a budget. We'll talk about how a budget puts you in a stronger position later. Subscribe to this channel to get a steady supply of your financial diet. Number 2. Invest in companies with low capital requirements. Warren Buffett has long advocated targeting companies that can easily raise prices without negatively impacting the business, particularly during inflation. Buffett also once asked investors to seek out companies that have an ability to increase prices rather easily. Buffett recommends investing in a company that can raise its prices without losing revenue because it generates profit. Number 1. Investigate your spending habits and budgeting. When inflation is this high, you can expect higher prices everywhere, from the grocery store to the gas pump. When you track your expenses and draw up a budget, you can identify and eliminate the unnecessary items you spend on. This leaves more money for you to invest or spend on more important things. Though inflation is high, it's important not to freak out. If you invest, cut costs where you can, and avoid highly inflated items where possible, you'll be ahead of the game. Consider hiring a financial advisor to help you adjust your investments for inflation. We recommend our video on how to use budgeting to get more out of your spending. Thanks for watching.